Hey, this is Serge. Do you think you have now what it takes to become wealthy? As part of the last few videos regarding the rat race, we discovered that it is impossible to get out of the rat race with earned income only. Meaning you will always exchange time for money. And because there is a finite number of hours in a day, in a month, in a year, your income is automatically limited also. At this point in our journey, we should understand that the primary residence, your personal car, or everything else similar to this are not an asset, meaning those things are taking money out of your pocket. And this is the problem. It should also be obvious to you now that fake asset or liabilities are not going to get you out of the rat race, but to keep you in it. What does it mean? It means that even if you have multiple possession luxuries under your name, you are most likely a paycheck away from insolvencies or bankruptcies. Remember the statistics of the previous video? Today we will finally learn how to differentiate between liabilities and asset. Unless we understand the difference between liabilities and assets, we will remain in the rat race forever. When we were in high school, the only things we learned about finance is how to balance our checkbooks. I'm sure you remember that. The teachers were only showing us the debit and credit columns and their effects on the account balance. Despite the fact that many people are able to balance their checkbook every month, some are still having difficulties to pay everything at the end of the month, or even worse, to save some money. Anyhow, balancing your checkbooks is basically creating an income statement, meaning what comes in and out of your bank account. The sad thing is that an income statement does not show all the truth about your financial situation. Basically, you do not really know if you are in financial trouble or on a path of wealth. You may think that you are okay because at the end of each month you have some money left over. But this is not enough to know your true situation. Please, if you like this video, subscribe, hit the like button, comment. For the rest of this video, I will show you from my computer screen in the same time as a visual support. So let's get there. Now that we're on my computer, I will show you the difference between an income statement, a balance sheet, and a cash flow statement. This will help us to understand why the poor remain poor and why the rich remain rich. Actually, I will divide this section in two parts, so today we will focus only on the rat race people. So now that we're on the computer, here we see the first section, which is an income statement, which contains only two parts. Contains the income, which is all and any type of salary that you may receive along your life on a weekly, bi-weekly or monthly basis, and then all the expenses that you may encounter over time. So now expenses here, this is just an example. Not all expenses are there, but I believe you understand what it means. The problem with an income statement is it does not represent or does not give you a full picture of your financial situation. It is a good tool to help us to go by on a daily basis in our life, and for the most part, this is what people are using. In the introduction, I spoke about the fact that at school, we learn about the debit and credit columns in our to balance our book. So basically, this is what at school they taught us. But again, this is only part of the picture. If we move on and see the problem with this here. So here I did extracted 4 pieces of a 1,000 pieces puzzle. So from those 4 pieces, are you able to tell me honestly and in detail what was the original image? Of course you can't. This is absolutely impossible, right? You may have some guests. Here you see some leaves, you see probably some bricks and maybe an arc doors and everything. But there's no way you're able to tell me what is the full picture. In fact, this is the full picture, right? There's no way you would be able to tell me what it is. And this is the problem with an income statement. You see some detail, you see what comes in, what goes out and so on, but that's it. You have a spotty point of view of your true financial situation. So from there, because this is the only thing we see, this is basically where you're in life, right? So you are going to work on a daily basis, you're running like crazy chasing the next paycheck. This gives you an income, earned income, what is called. From there, you take your own income and then you start paying your bills, your rent, your mortgage, your car, etc., etc., etc. And at the end of the month, yes, of course, you have nice shiny toys, a car, a house, and everything. But what? You are basically poor, like that poor guy, right? So now, how can we fix this? Obviously, we need to add extra tools over the income statement. The next one that we have to look at is the balance sheet itself. So the balance sheet will include elements that we do not see in the income statement, right? You see a first section here in green. What are your assets? You're saving. What you have in your bank account? Do you have precious metals or anything? Do you have stocks? Do you have bonds? Do you have CDs? Do you have real estate? Do you have anything? So basically, that column here grows over time as you are accumulating things that are not, of course, liabilities that we have been speaking for so much time. And then the other part from the balance sheet is all the liabilities that you have, right? Your mortgage, school loan, cars, bank loans, etc. Any type of things you have. Credit card, the major one, right? Visa, MasterCard, and so on. But also Canadian Tires and the Bay and so on, right? All those very expensive cards, which you should never have. And of course, if you have a business, here you will have the mortgage assigned to that business itself. So now, can we use only the balance sheet and forget about the income statement? No, we can't, because if you do, you will be exactly in the same position that we were with the income statement, meaning only having part of the picture. So now, to be able to have a clear vision of your financial situation, you need to have both together, and this is what it looked like. So this is the full pictures, and this is what people call a cash flow. See, now here you have your income statement, which contain your income. And then that income here, you see that there are elements, extra elements that are appearing here. You have interest and dividends, you have real estate and so on. You still have your expenses, all expenses that you may have with your business or personally that you will encounter. And then you have the balance sheet things. So now from there, everything that you do financially will be seen here. So now you have that 1,000 puzzle piece. So you do have the full picture, right? You know what comes in, what goes out, and the best is you know why it's coming in and out. Now you have the full pictures of all of this. So now let's see some examples of what I've been talking so much in the previous videos, right? House, car, and things like that. Let's see where we're going with this now that we have a tool to have a full picture. Let's look at the example of the primary houses. I've been pondering on you guys for the last few videos telling you that the primary house is not an asset. So now we will see why, right? First of all, to have a primary house, you first need to have an income, right? You need to have a job. From that job here, you go to the bank here in that reddish section, and then you beg the lender, the banker, to give you some money, right? So in this case here, you will have a primary residence mortgage on your house. And now because of that mortgage, now you are getting a house, right? So on day one here, if we take the example of primary house before, $228,800, full mortgage here, and then you have an asset here that become with a big $0. So now over time, from the same income at the beginning, you need to pay what? You need to pay your mortgage, right? You need to pay that section here. But This is the problem that we were talking about. Even if you are paying the mortgage and every time that you are adding amount on your mortgage, the asset increase a little bit, you still have to pay taxes, right? So property taxes in this case. You still have to pay utilities, you still have to pay home repairs and renos and so on. And this is the problem why your primary house is not an asset. It's because even if the mortgage is fully paid, meaning the mortgage here disappeared, so now you have a primary residence here in this section, you still have to pay taxes for the rest of your life, for the rest of the time you have the house. You will have to pay utilities all the time. You will have to pay reno and so on. This is why primary house is not an asset, because you're paying this money out of your pocket. So of course, as we saw in that example in the previous video, over time when you sell the house and everything, yes, you may make a little bit of money. Here in the example, we're talking about $51,000. And this is why here your asset become an asset, but it's very shaky, because it will be an asset only if you're able to sell at profit, right? And only if that profit cover, right, the capital gains, all the expenses on the house, all the taxes and everything. So basically, this can be what? $0 at the end. In our example, was 51K. So now let's look at another example, primary car, right? Why a primary car is not an asset? Simply, from your base salary again, you go to the bank and then you get a car loan. From that car loan, you need to pay the loan over time, and you will have repair and gas and everything. But now, a primary car, depreciate much faster than you think. In the first 3 years of owning the car lost at least 40 to 50% of its value. And over time, if you keep it long enough, the value will be zero. So therefore, at the end, you have no asset at all. You just spent and spent and spent money. This is why having a car and not doing any type of business with it is not a good thing. Of course, it's nice to go around with a car, but don't think about the fact that it is an asset. So from there, let's look at the cash flow of the people in the rat race. And this is why people remain poor. From their own income, they are acquiring liabilities, right? Mortgage, school loans, car loans, bank loans, credit card, and so on. And then they use that income here to pay all expenses that are coming with it. Therefore, at the end, they have zero. And even worse, they may never be able to pay everything. Right? Keep in mind, if you cannot pay your mortgage, the bank will come and seize it. If you stop paying the loan on your car, the bank will come and seize it. So this is why the poor remain poor. And this is why people in the rat race are always poor. Why? Keep this picture in mind. Your earned income is used only to buy liabilities. There's no asset collected over time, and all this income goes out through the windows, and you are lucky if you can save a little bit of money. So this is why. The next video we will understand the cash flow of the wealthy people and how to go from a rat race cash flow to a wealthy cash flow. With the information presented today, you should understand why the rat race people are poor and will remain poor. Now, we need to figure out how to become wealthy. The wealthy people will buy assets and use the money generated by those same assets to cover their life expense. Yes, their life expense. Before buying a brand new car or the toy that they want, they will buy an asset or many assets. Those assets will generate new income, and then they will use those newly generated income to buy for their dream car, dream house, dream toys. So the money used to buy these dream cars, houses, and so on is not coming out of their pocket. Therefore, they are not affected financially by these. They are getting richer and richer. Again, if you like what you are hearing and seeing, like this video, write a comment, subscribe, and let's continue this journey together. Also, I would like to invite you to watch the next video, Rat Race Part 5, Have Your Asset Pay for Your Lifestyle. We will look at the wealthy people cash flow at this point. The way they structure their finance is the only way to stop worrying about money ever. Why? Simply because everything they buy, their lifestyle, is financed by their asset and not by their regular income. Okay, thank you and see you next time.